All right. Good afternoon, Checkmate crew. It is August 31st, 2022. Wednesday, here in the great city of New York. Okay, so we're seeing continuation of what I expected here. That gamma pin is still working out. Talking about working out. I mean, this oil thing. We'll talk about oil later, but last night we took a lotto on SPY. I really didn't think much of it. You know, guy. You know from all the positioning. Oh, I still have a few left. Okay, well, I got out of some of them at break even. I guess I still have a few that didn't go through. It went all the way up to like 20 cents or so. So that is interesting. So I guess that worked out for some of you guys who were able to stay in front of your computer screens. I had stuff to do today. I just put in an order right above my buy price, and I saw some of it get executed. But I think I just have a few stragglers still. So I think it went all the way up to 20 cents. So some of you guys may have been able to, I don't know if some of you followed me or not, but if you did, you were able to get up to like 50% or so. It went up to 20 cents today. So we're seeing that continuation of that gamma pin. Now, like I told you guys, be careful about this gamma pin because we're like 3 weeks before OPEX. And usually when a gamma pin around a monthly OPEX starts this early, we tend to see a big move before the OPEX ends. Okay? It just tends to be. It doesn't happen all the time. I'm not saying that it happens all the time, but it tends to be that way. When we gamma pin like about a week and a half before OPEX, generally what we see is like 4 or 5 sessions where price kind of just coils around that open interest. And right now, the big open interest strikes are at 4,000 on both sides on the calls and puts. So that hasn't changed. The OIs really haven't changed. OIs only get the open interest only gets updated once a day, usually around midnight or so. But we still have 120,000, 110,000. So it's a little bit more on the put side, and that is why when you see that gamma hedging, you're seeing that gamma hedging happening, or that gamma pin happening a little bit under 4,000. It's because you have a little bit more puts than calls, and so it causes just a tiny little bit of a down drift. But generally, again, like I said, when you see that gamma pin happening this early, it usually doesn't last. Okay, and usually before OPEX, it will make a big move up or down, which goes with our thesis that after Labor Day, I think that volume will re-enter the market. Generally, that's how it is. It's very seasonal like that. August just tends to be a very low liquidity, low volume period. So, I don't really see much different to report. It's still very much the same. We saw a big move down. We could see if the VIX goes down below the 25 to 28 range. If it breaks below 25, we could I can see us going all the way up to like 4150 or so, 4200 even on a VIX drop. If the VIX drops to like 21, I think we can definitely get to like 4150, 4200-ish. We can get there. We could get there in one day, technically. We've seen that before in low liquidity settings where 100-point moves in the S&P 500. Definitely possible, okay? Just watch the VIX. For you day traders out there, watch the VIX. You guys know when I used to day trade, I told you guys my day trading strategy. I would just watch for the VIX. I see 3 1-minute candles down or up. And that would be my trigger. Okay. Lots of triggers happen when you do that though. Okay. So you do get chopped around a lot, but when you do get that one big that move that lasts for like a day or two, that's where you make up all your money, okay, and more. All right. So yeah, there's a lot of noise in this signal, and especially during these days, when there's all this low volume chop. But if you guys want to be a little bit more selective on when you take the day trade, I say that 25-28 range, especially now that we're getting close to that 25. If it breaks, if you see a clear break of VIX under 25, I'd buy some calls for you day traders out there. Me, I'm probably not going to be sitting in front of my screen all day today. I have some things I need to take care of. But if you see this VIX break down below 25, I think we could definitely see some follow through because there's a lot of in the money puts. And before OPEX is out, I can definitely see us getting there if the VIX falls. If the VIX falls, that's the key word. If the VIX falls, all right. If it just remains in this 25-28 range, we're probably going to keep this gamma pin. All right, we'll probably keep this gamma pin until volume enters back into the market, which I think will happen after Labor Day. Usually after Labor Day, about a couple weeks after that, that's when we really start seeing the largest volumes of the year. Usually around 4 to 6 weeks after Labor Day. That's when we get into that fourth quarter, big volume quarter. So keep that in mind. Oh, by the way, guys, this options expiration that's coming up is a quad witch. All right. What does it mean, quad witch? Futures, stock futures, index futures, dividend payouts, and options expiration. Okay. There's 4 things going on. So for those, as we enter OPEX week, just remember that when dividends get paid out, all the the price of SPY when it opens will open less than will open minus the dividend amount that gets paid. So make sure you guys keep that in mind if you are playing this monthly OPEX options. I'll go over it more as we get closer and closer. We're still like 2.5 weeks away from OPEX, but just keep that in mind, guys. All right, so let's go to our oil trade. Before the oil trade, we had CPI numbers coming out in the Eurozone. 9.1% year over year. So it came in a little bit higher than the last reading. So inflation is going up. It looks like a lot of that is coming from energy prices over there. Energy, electricity. Yesterday on High Noon Highlights, I went over electricity prices. On the Discord, I also set out a link that showed you guys the European electric prices. I'll show you guys again. Let's see. Sometimes that site goes in and out. Sometimes it stalls. So here you go. I just refreshed it for you guys. So if we go to here, you can actually track the electric prices per megawatt hour in these countries in Europe. But yeah, if you go to like Germany, they're at record highs. So it's not a surprise that we're seeing some more inflation in the Eurozone. That came that actually pushed out some news, and of course after the announcement they interview some of the ECB members, and they were sounding increasingly hawkish. One of them mentioned that perhaps a 75 basis point hike is in the cards for the next ECB meeting. And the ECB has never had a 75 basis point rate hike before. So if they do a 75 basis point rate hike next time, that would be the biggest one in their history. All right. And that was talked about, at least. Now, whether or not the European bond market prices that in as a possibility or not remains to be seen. This is just day one. Let's see what happens in 3 or 4 days, okay? And so hopefully next week I'll report to you guys what's going on in the bond market in Eurozone. We do have that our Euro position, FEZ. FEZ is down for the day. And right after that announcement, that's when we saw a big down move happening in Europe. Also in oil, we saw let's see. Let's go to our December contract. Oops. Let's go to our December contract. Right here is when they announced it. And then, boom, down it went. I mean, it just like tanked right afterwards. And I think it was from that ECB report. I don't really see that much. I mean, it is what it is. I mean, we're not, when you trade, you don't get the exact bottom. To think that you're always going to get the exact bottom, I think is a little bit foolish. And you're never going to get the exact top. It's the great middle that you're trying to collect. And so I get it. Some of you all entered some spreads with me. I'm still pretty confident in this. For those of you who are a little bit more cautious, if you guys want to use the low of the day yesterday as a stop, that's perfectly fine. For me, my USO spreads are less than 1% of my speculative account. So I don't really mind. I hate losses, but if it goes to zero, so be it. I do have until October, so I'm not really too worried about it. The options market on oil still hasn't changed. We still have huge put walls and call walls on the December options chain. That's what our thesis was. That's why I used 90 as our buy level. I did wait for it though to touch the 18-day moving average. That's the CLZ 2022, the December contract. I'm not looking at the front month contract. I'm looking at the December contract because that's where all the options expirations are. All right. Huge options expirations, actually. If you go to our options picture here, you can see white boxes. All these white boxes, it says November. It's because it's November expiration. It's the December contract for December delivery, but it expires in November. I don't know why TOS does that. I don't know why they're not consistent in that. They label it here as November, but then it's December when you actually look at the options chain. I am definitely going to let Thinkorswim know and give them a piece of my mind that they should change that. That's confusing. That's why people get confused in futures trades, because it's not consistent. But it is what it is. So watch out. For those of you who use Thinkorswim, watch out. But yeah, look at all these white boxes. Huge up in interest here. That the take profit level is at 100. That's where we see our first major call wall on the December futures contract. Here we see that around 90, we have our first major put wall. And so lo and behold, actually last night, after that news came out, yes, it dipped a little bit, but then we saw, we saw a little bit of buying happening in afterwards, and now we're seeing the December contract come back up. So I'm not too worried about this. Again, guys, if you guys are super cautious and you're super skittish about this and just like hate my guts because you entered this too early, you can always stop out if it closes under 89.38. That's the December. But for me, I'm not doing that. I'm not going to stop. I'm not going to use a stop. I'm just going to use a conditional. I think the conditions in the oil market haven't changed. And I think this was just news driven just from the ECB. It is what it is. I mean, I'm not too afraid of it. But my outlook on oil still hasn't changed. As far as the other commodities are concerned, the other commodity that I'm really looking at is corn. Right now, corn is going up. Unfortunately, we were not able to enter any type of decent long. I wish we could have gotten long. We were actually monitoring this and seeing it make higher highs, higher lows. And I remember around this point right here, we were talking about buying it. And I said, ooh, if it gets to like around here, if it gets to 577, I might go long. And it never happened. It just never happened. It just kind of just ran away from us. I think this is a two-sided market, at least for the rest of this year. I think next year we could definitely see higher corn prices, but I think before the planting season, however, if we get to 750 or so, we're probably going to pull back. So that's what I'm playing. I'm playing the pullback now. I'm going to be super patient and wait for that 748, 750 zone. So let's call it 745 to 750. that is where I want to go short on corn. That's we start seeing big call walls at around 700. But I think because of all the news and all the, not only the expectation earlier this year was that corn was going to have a decent crop year, but because of all this weather, because of all the heat here in the United States, I think they're going to have to they may have to revise the numbers down. And if you look at our episodes back in the end of June when we called the top on corn, I said that this is the top as long as we don't see any weather disasters. And so we're actually seeing those weather disasters: heat, over flooding in certain areas. Some of the corn crop had to be downgraded in quality, and so yields are low. They may revise yields lower, and when the USDA does that, I can definitely see this popping, and it could overshoot all those call walls. But there's a huge significant call wall at 750, and I just think a lot of supply will come back. I think a lot of the commercial entities will lock in prices at 750. I mean, if you're a corn grower and you just saw your potential corn price drop like this and it goes back to those levels, don't you think you would sell right here? I mean, it's partially market psychology, also partially options positioning as well too. Options positioning says there's a lot to go through for price to break out of these levels. Okay, it's going to take a lot to break out of this. But I think the edge of that price structure is 750. That's where our reward to risk is the strongest. And so I will be entering put spreads on either the corn futures contract or the corn ETF right here. And then we just stop out on 3 days closes above the highs. If it closes 2 or 3 days above these highs, we stop out for a small loss. Boom, small loss, but a potential for a large gain. So I like the reward to risk on this trade. But no 750 or never, no 745s, no 750, then no trade. Okay, I'm gonna be patient on this one. So that's what I see in commodities. As far as the other commodities are concerned, I am not going to be participating in them. However, wheat's on the news because of wheat is on the news right now because of all the opening of the ports in Ukraine. Doesn't look like it's really affecting the price all that much, although we did see a little bit of a drop on those news. But it looks like it's coming back up. All right. We have a lot of food storage news coming out in emerging markets, and a lot of emerging markets right now are scrambling right now to buy dollars, or at least for the last few weeks, they were scrambling to buy dollars at whatever price possible, just because commodity prices are going up. However, last night and the day before, I did notice that in China right now, the People's Bank of China is dumping U.S. dollars right now to shore up their currency. Okay, so that's interesting. They're actually trying to shore up their currency. I'm not sure if it's because they want to fight their own price increases. As they do all this stimulus. I'm not sure if that's the reason why, but the Bank of China, they have a mind of their own. Trying to predict what they're going to do is like, I mean, it's not even a coin flip. It's like, it reminds me of that one episode in South Park where they cut the chicken's head. And then they let the chicken run around, and it falls on a policy that's on a board with different outcomes. It kind of is like that. You just kind of random all over the place. But right now they are dumping dollars. And so we saw, especially last night, we saw a dollar really dump after it passed 109 or so. And it's coming from China right now. So how long does that last? Usually that can last like a week or two. We'll see. This line is where the 18-day moving average is. It has been very, very pivotal. The 18-day moving average has been pretty. It's been pretty useful actually in looking at the dollar movements. And I think that still will continue. I think the 18-day moving average will still be used as a pivot. There you go. So you can see it pivots. It pivots off of that 18-day moving average, especially if you look at the futures. Yeah. Well, for both, they're very, very similar, the index and the futures. But you see, it's pretty important. So if we see China continue dumping, I think that offers a support. And maybe we just bounce from there and then go back up. Not sure. I don't have any bets on the US dollar futures. But if this goes up, that puts more of a lid on risk assets. If this goes down, the lid on risk assets goes up. Okay? So if we see going back full circle to our OPEX thesis for S&P 500, if we see the VIX fall and we see the dollar fall at the same time, get ready to see 41 to 4200 on the S&P 500. Okay, and the further the dollar drops, the more the S&P 500 will go up. Okay, based on the VIX coming down for OPEX, for options expiration. So a little bit of a warning there for you guys that have put spreads or guys that are trading bearish. Just always keep an eye on that dollar and that VIX. You see both of them drop hard, get out of your positions. Get out of your short-term bearish positions. I'm not going to be getting out of my put spreads unless we see liquidity actually changing. You guys know that, stops, I've talked about stops. When do I set my stops? I don't like to set price as my stop. I like to use an invalidation of a data point as my stop. And for me, it's really all about our liquidity studies, New York high-low line. So, New York high-low line is, still curving down. And if that's the case, if the New York high-low line is curving down, generally, that means breadth is not good in the market. Junk bonds AD line. Junk bonds AD line has really been helpful this year. I mean, really, really helpful. So it's still going down. The junk bond liquidity is not improving at all. So even if we see a temporary rise, I still think that we are going to make a next leg lower as volume enters the market again. Okay, well, at least that's what the data is pointing to at this moment. Let's actually take a look at some of the other indices that we're in. QQQ, so we're still in those QQQ spreads. We're still in the IWM spreads. Nothing has changed. You can go back to our previous episodes and take a look. Nothing has really changed. I haven't changed my positions at all. I just took those lottos yesterday, and I got out of most of them just above break even, but I think I still have a few stragglers. I think I kept one or so as a runner. Probably going to go worthless, but that was a lotto worth doing. Sometimes lottos work out, sometimes they don't. And this time I just happened to be lucky. FEZ, with the inflation numbers coming out, we saw a lot of gains get wiped out for the day on the German stock exchange as well as the EUROSTOXX 50. So again, really nothing has changed. I'm still in the same positions I'm in. Let's take a look at some of our other ones that are in the plan. I'm still looking for 1380. I'm not sure if we're going to get there. We'll see. Hopefully we get there. HUT getting closer to I buy level. Interesting. It's getting closer. It's getting closer. Okay, good. What else is in our plan? Oh, Pilgrim's Pride. Pilgrim's Pride, if it, I think it's actually getting closer and closer. I think it passed our 2 Bollinger Band. Again, this is going to keep going down, I think, if the market keeps going down too. For those of you who are a little bit aggressive, you guys probably already got in with shares. Me, I'm trying to get in with options. Okay. If I might actually pick up some shares later on today. Because I think we just touched the 2 standard deviation Bollinger Band, right? Let's see. I keep missing my alerts on that because the Bollinger Band on PPC actually keeps moving. Yeah, because I had originally set it right there. So yeah, I got an alert earlier today that it passed that point. So yeah, I got my alert today. I'm just gonna wait for end of the day. Maybe I pick up some shares today. But as far as options plays for PPC on the bullish side, I would wait just because there's that theta decay if you're long options, if you're long calls. So maybe you could short some puts that are out the money. And do a cash secured puts, but I will venture into some shares. I will nibble into some shares today on PPC. I still think meat prices go up as corn and all these other commodity prices go up. Generally, when corn and all these grains go up, the prices of meat goes up as well too. All right. So there's that. Oh, one of the things that I haven't talked about recently that is part of the plan, but I just forget to mention it all the time, is Tesla. I'm still looking to short Tesla at those levels that we talked about. So if we see the VIX drop and the dollar drop as well too, and we see the S&P 500 go up to like 41, 4,200, that's a big if. The only reason why I say I'm even bringing that up is because we're in this monster options expiration for September. There's a lot of in the money puts right now. If they get cashed out before September OPEX, which is a possibility. If it does happen, we could see a little bit of a pop, and then and then the main trend resumes later on. We could see that, okay? And if that's the case, we might get closer and closer to our short zone. Again, right here, this red line, I want to buy some puts on Tesla if we get to that line. Other plays, gold. Gold is getting ever so closer to our 1680 mark. I'm going to be buying call spreads here just for a temporary pop. Speaking of metals, oh my goodness, guys. I don't know what the hell is going on with uranium, but it just will not fall. It was down almost 10% today, and it just will not go down. I don't know why. And there was actually bad news that came out, and this is why I'm so super bullish, like even more bullish now on uranium. So the Prime Minister of Japan came out yesterday. Prime Minister Kishida came out, and he walked back his statements that he made earlier last week about the possibility of expanding the Japanese nuclear power infrastructure. And he actually in yesterday's report, so yesterday in Japan, he came out saying that they are going to try to come up with an energy policy that relies less and less on nuclear energy. So he kind of walked back on his previous statement, and he said no, and so basically then what he said was, the reason he had said that was because he just wanted the committee to explore all avenues of energy. So he just wanted them to include that in the report. That's how the media, at least in Japan, is spinning this. That's not necessarily like good news for uranium, but even with bad news, uranium just still keeps going up. Okay, I'm telling you guys, the macro around this is too good to pass up. Oh, but uranium overall is down. UUUU though is up. Huh? Is it just UUUU then? I'm telling you, this company is a special company. It's the owner of the only uranium mill in the United States. Oh, well, look at that. Okay, so all the uranium names are down except UUUU. What is going on? Ugh, of course, right? Of course, the one uranium stock that I fall in love with is the one that has to keep going up when everything else is going down when I'm not in it. Of course, guys, Murphy's Law, right? Of course. When I'm patient, the market likes to act fast, and when I act fast, the market likes to act patient. Great. That's life. That's trading, I guess. That's part of the game. There's no special news on UUUU. I just checked everything. Finviz, TOS, everything. All my platforms, my news platforms, I'm checking on UUUU right now. I don't see anything. I don't see anything news relating to this. I don't know. Maybe it's just this stock then. Maybe it's just this stock. I don't know if there's any options activity. There's no crazy options activity or anything. I also know they're in some rare earth metals as well too. Some isotopes and things that are used in medical technology. They're also in there. There's this I forgot what the name of it is. I'm not a rare earth expert, but they're in this rare earth that this metal. I forgot what it's called. I'll take a look at the I'll take a look at my research that I have in my computer and later on, and I'll let you guys know what that metal is called. But they got this metal, and it's up like, I want to say like 50 or 60% on prices this year, and they're one of the main suppliers of that rare earth metal as well too. They do mostly uranium, but they also have this rare earth metals division. Maybe it's that. Maybe the prices on that have gone up. I don't know. Those metals are very thinly traded. They don't even have a futures market associated with them, or they don't have a futures market that's associated with them that's readily tradable to the public, at least. And so I will do a little bit of digging. I'll find out what that is and see what the current prices are on those rare earth metals. Maybe we're seeing a little bit of divergence because of that participation in that industry. We'll see. So today, that's all I had planned. I didn't really have that much of a plan because, it's the same as usual. I'd be just repeating myself if I went over the whole list of things that that we usually cover. Nothing has really changed. All of our indicators are still pointing toward lower liquidity. Junk bonds AD line. What else? Our New York high-low line. All right, it's all pointing down. It's still coming back down. We made a lower low now. I said that would signify that we're going to continue the bear market rally. So nothing has really changed. Oh, actually, maybe there's one thing. So SPXEW. This is the equal weighted S&P 500. Yesterday, I think it closed right below the 50-day moving average. Okay, now it's trying to attempting to close above it. We will see. I think if we close 2 or 3 days under this 50-day moving average on the S&P 500 equal weighted index, I do think that we might see more selling. That just means when the equal weighted index is selling off, that means there's broad participation in selling. That means all stocks, not just like the big stocks, but everything down to the small stocks, everything in between, everything's getting sold off. That means indiscriminate selling is happening. All right, indiscriminate selling. So I think that would be our sign as well too. But everything, I mean, this would just reinforce what we already know. Really, the high-low line, the junk bonds AD line that I post on Discord every night, that's been really helpful. I mean, this has been really helpful in positioning and allowing us to stay with our risk off spreads, all those put spreads and the UVXY call spreads that we have. This has really been the only thing that really has been helping me stay in those positions. And now they're all in the profit overall. If you take all the put buying that we did since June, we're in the profit with actually pretty good, healthy profit margin too. If I cash out of everything right now, I think I made like 50 or 60%. So right now we've got healthy profits though. I think we have the possibility of more. I think we can walk away probably with a 100 to 150% profit. Depending on how fast this sell-off happens. If it's a slow sell-off, we'll actually make more money because then gamma will be more in our favor. So if it's a slow, choppy sell-off, we could probably make like closer to 200% on our spreads. If it's a fast sell-off, we'll probably make like 100, 150%. That's if we get a continuation of the sell-off, right? I mean, there is a possibility where that sell-off doesn't continue and we rally, but the data doesn't suggest that that's the case. The data says that liquidity is dropping. So I'm going to go with our data because that's what's been working so far, okay? And let's just take a last look at HYG, down for the day, even though the market is attempting to make positives. Okay, so there you go. Boom. Checkmate trading, baby, all day. All right. Any questions, comments, rude remarks? Oh, you know what? I forgot to go over crypto. Let's go over crypto real quick. I know a lot of you guys are in the crypto space. Some of you guys trade exclusively crypto. which is interesting. So let's take a look. My plan still hasn't changed. I mean, I'm still looking for that red line. If we get a big sell-off, we could get there. You know, it's really funny on ETH. I drew these lines. And again, this green line is the same green line we've had from before. It's the uptrend line from 2020 lows, from the COVID lows, and the uptrend for the year in 2020. I just extend that line over, and it just so happens to be the pivot area of this whole sell-off that happened in June. Remember all the hedge funds, the 3AC, all those, you know, the huge funds collapsing. All these loans against firms got called, and some of them had liquidity issues. All that, this all happened, and all of that, it still maintained to pivot from that line. So that seems to be a very important zone, this line right here. But also, if you take our, if you also take a look at where we saw risk off happening in those months, they connect right here, on the 16th, which is supposedly when ETH is supposed to do the merge. So there's events, and not only that, it's also right before, or it's also right as we get to the largest options expiration in SPX history. Also a large options expiration in Ethereum as well too, all coinciding to this, plus the merge, plus these two zones converging. That seems to be a hotspot right there, a hotspot. And then remember how we said that, you know, there's a possibility that that we could get to here if the ETH gold line drops. I don't think, you know, the ETH gold line dropping to here and matching up with ETH 1200 would mean that gold would have to be around 2400, which I don't think is going to be the case. If we have a quick sell-off, I don't think that's going to be the case. All right, so maybe we don't even, so what's my point of telling you all of this? You know, we may not even hit this line. It's a possibility, okay? And I do want to remain patient, because I think if it does hit there, that will be an awesome opportunity. But again, circling full back from what I said in the beginning, you're never going to get the true, like, real bottom, and you're never going to get out at the true top. It's the big middle that you're trying to win, okay? So maybe just for risk management purposes and not to, you know, feel FOMO, you may, you know, maybe start nibbling at like 1240, 1250 or so. You can start nibbling some Ethereum. Probably that's what I'll do. I'll start nibbling Ethereum at 1240, 1250, but I will wait for my big buy levels here. But just in case, if it doesn't get there, I'll have some skin in the game nibbling here at this level, this zone. I think it's too compelling to miss up. So I will start buying here if we get here by that time period. Okay, small, very small. My main buying still happens, red line, right here on ETH and gold, okay? As far as positioning is concerned, let's take a look here. You know, I know BZ, you monitor the options chain pretty closely. You sent out some pictures of some spreads, of some bearish spreads being opened on the market. That's interesting. I think the dates were for different expirations too, right? I think, yeah, I think they were for December. Oh no, they were for the same ones, December and March. Oh, look at that, December and March. Oh, 10K is back. You were mentioning this 10K guy. He's back. If it's the same entity, even if it's the same entity, we don't know, right? We don't know. Still negative delta positioning that for September, for later this week. And as we get out of this week, we see that we have positive delta positioning for December and March later this year and next year. Okay, so it doesn't look like anything really has changed. let's see here. It doesn't really look like anything has changed. Notional value is still around that 6.8, $6.9 billion. So we're not seeing, big changes, at least in the structure of the Ethereum options market. So it's the status quo. I think a lot of retail got wiped out. I mean, it was like what, almost $1 billion of Ethereum options just wiped out. I think most of them were calls, because we saw a lot of calls, short dated calls being bought, remember, over the weekends, for the past few weekends. And where are they now? They're not there. The OIs have all shrank in those expirations. Okay, so yeah, it is what it is. I mean, it's per usual, right? Retail chases at the last moment. They got in at the tail end of the rally, of this bear market rally, and then when the main trend resumes, they get wiped out. That's just the way it is. When everybody starts getting bullish again, that's when the main trend reasserts itself in this bear market. It's been like that in past bear markets too. If you look at the S&P 500, back in the 70s, 80s, back in the 90s, it was all the same thing. Back in 2008 as well too, people thought that the bull market was beginning in the middle of 2008, and they were so wrong. And that was like before even Bear Stearns fell. So that's, it seems to be a common theme. History kind of, it doesn't repeat itself exactly, but it does seem to rhyme, does it not? So that's all I have. Anything else you guys want to go over? Any comments, questions, rude remarks? Ooh, Ari just said something. Reading more news about Iran enriching uranium and curious on thoughts of how that will affect their uranium stocks. So, a lot of the uranium stocks, I mean, I believe Iran has it's a sanctioned country. So a lot of the uranium names that we're looking at are centered in the United States and Canada. So I don't think Iran enriching uranium is going to be that big of a news for uranium energy stocks. I just don't see that. I mean, unless, so devil's advocate here. Let's find a reason where it could be affecting our uranium stocks. So I guess if Iran is enriching uranium and for some reason, let's say the United States and Iran cannot get to a deal, all right? We may have a situation where other countries may want to stockpile more nuclear weapons. That's a possibility. And if that's the case, where are they going to be buying that uranium from? That may put some further pressure on uranium supplies. Uranium is one of those things where the miners just don't keep mining this if there's no long-term deals. Okay, if the uranium miners don't get these long-term contracts for purchases that last like 5 to 10 years, they usually don't mine. They just don't mine, and they just make their operations as lean as possible so they can get to the next boom season. And with uranium, the boom and bust seasons are like 20, 30-year cycles. Okay, and so they ramp up production when they get all these deals, and then they're able to really get lean very quickly. Especially your top uranium miners like CCJ, UUUU, DNN, those kind of names. They're like that. So in the last earnings report, especially for UUUU and CCJ, they are getting closer to securing some long-term deals, some major long-term deals. At least that's what I recall reading. And so we saw a pop in those uranium stocks because of that. I think a lot of the uranium buying is really going to be happening for energy purposes more than anything else. I think governments are going to get more friendly around the idea of expanding nuclear power as fossil fuels just keep going up in price. I mean, let's just face it, oil is at highs, natural gas at highs, coal at all-time highs. I mean, all these fossil fuels are really getting expensive, and they have an environmental toll as well too. One could argue, well, nuclear has environmental toll as well too. If there's a meltdown or something, that is true, but the chances of that are quite low. I mean, we have nuclear power here in the United States, Western Europe, like France has it, and we haven't seen meltdowns there. The ones that people remember are Chernobyl and Fukushima, but Japan is prone to natural disasters, so I think Again, I think when governments look at the data, they're going to get a lot friendlier. That's just my thesis. They're going to get friendlier toward uranium stocks or toward nuclear energy. So I think uranium stocks for the next, I would say 5 or 10 years, they're going to have a bid. Maybe 5 years, okay? But that's my holding period that I have when I buy uranium stocks is going to be 3 to 5 year holding period at least. Okay, at the very least. Oh, speaking of France, by the way, we saw news coming out of France. French electric prices are going just sky high right now for their euro per megawatt hour. Right now, the market is expecting France to have some issues this winter. I think 57% of their nuclear power facility is down because of maintenance, okay? So it looks like they may have to import some electricity, maybe from Belgium, maybe from Germany. Mostly when they import, they do import from Germany, okay? Germany, however, has their stockpiles. I don't know if in their calculation, they said that they needed 85 to 90% of their storage facilities full in order to get through the winter. Did they factor in exporting some of this electricity to France or not? And I think the market is expecting there to be some type of rationing in electricity this winter in Europe. At least if you look at the power markets and electricity markets, it appears that is the case, because even though natural gas prices are falling, we're actually seeing that general electricity prices are still going up, And their natural gas market is different than ours. Ours is the Henry Hub. Their gas market is a little bit different. So their gas market looks like this. As you can see, yesterday it tanked 20%, and it's down almost another 10% or so today, like a little bit less than 10% today. Okay, so natural gas prices are falling in Europe, but electricity prices don't seem to be agreeing with that. France, it is actually coming down. Germany, though, is not. So what does that mean? I guess, will they have to ration? We will see. It's too early to tell. Italy, it looks like the market is pricing in that Italy is going to have some issues when it comes to electricity. And Spain, maybe not so much Spain. But Italy, definitely. Italy and Germany look like their electricity situation this winter may not look so bright. Okay, I'll keep monitoring this and we'll see. Okay, guys. Any other things you guys want to look at? Any other questions, comments, rude remarks? All right, guys. Well, in that case, have a wonderful day. I'll see you guys again tomorrow at noon Eastern time, as always. And one of these days I'm going to do another Theta Thunder. It's going to be this week, guys. I promise you guys. I told you guys I shared with you my strategy that I've never lost money on, my 100% options premium selling strategy. I've never lost money on this trade since I started in 2017. I will share that with you guys sometime this week. It's just been a very hectic schedule for me this week, so bear with me. I will announce it. It may be a little bit short notice this week, but as always, I promise to put everything on YouTube with chapters so that you guys can listen in at your leisure. Okay, guys? So have a wonderful day. We'll talk soon. I'll hang around in the Discord for a bit and see you guys later on.